Bitfarms Ltd. (BITF) is currently trading at $2.83 in the pre-market session on Monday, January 12, 2026, marking a slight uptick of 0.01% as the market prepares for the opening bell. This follows a period of significant volatility where the stock has been navigating a complex landscape of shifting mining economics and a broad strategic pivot. While most retail investors are still viewing this as just another proxy for the price of Bitcoin, the reality unfolding behind the scenes is far more structured and potentially more lucrative than the standard mining play narrative suggests. The market often traps people in the expectation that a miner's value is tethered solely to the daily fluctuations of the crypto market, but Bitfarms is currently in the middle of a massive structural transition that is decoupling its long-term value from that singular metric. The expectation from the crowd is that Bitfarms will continue to struggle with the high costs of production and the diminishing rewards of the mining cycle. However, the reality is that the company has just announced a complete exit from its Latin American operations, including the sale of its Paso Pay site for up to $30 million. This isn't just a simple asset sale, it is a tactical retreat to consolidate power within the North American energy grid. By rebalancing their portfolio to be 100% North American-based, they are positioning themselves to tap into the high-performance computing and AI infrastructure demand that is currently starving for power. While the average observer sees a company shrinking its geographic footprint, the smart money is looking at a company that is shedding low-margin, high-risk international assets to focus on high-moat domestic infrastructure. If you're following the sector closely, you know that institutional interest in Bitcoin has reached a point where daily purchases are significantly outpacing the total daily supply created by miners. We are seeing a supply-demand imbalance that hasn't been this pronounced in years. In this environment, Bitfarms isn't just a producer, they are a gatekeeper of the infrastructure required to secure the network. But there is a deeper layer here. The company is presenting at the Needham Growth Conference in New York City tomorrow, and the expectation is a standard update on hash rates. The reality is likely to be a detailed roadmap for their conversion into an AI-ready data center provider. They have already committed to a massive 110-megawatt expansion in Pennsylvania, specifically designed to support the next generation of liquid-cooled GPU clusters. When you look at the recent price action, it is easy to get distracted by the noise. The stock has seen a 52-week range from $0.67 all the way to $6.60, a spread that reflects the extreme uncertainty and the massive upside potential. Institutional activity is starting to hum in the background of this ticker. We've seen major platforms and individual brokerage services reporting a steady accumulation phase. If you look at the order flow on Interactive Brokers or the retail activity on the Robinhood app, you can see a tug of war between short-term speculators and long-term accumulators. Comment below how many shares of Bitfarms you are currently holding in your portfolio and whether you are adding at these levels or waiting for more clarity on their AI transition. The recent third quarter figures from late 2025 gave us a glimpse into the financial health of the business. Revenue from continuing operations hit $69 million, which was a staggering 156% year-over-year. Despite a net loss that caught some off guard, the adjusted EBITDA came in at $20 million, or roughly 28% of revenue. This is a massive improvement over the 8% margin we saw in the previous year. They are sitting on a liquidity mountain of over $814 million, which is practically unheard of for a mid-cap mining operation. This cash pile, largely bolstered by a successful $588 million convertible note offering, gives them the runway to build out their AI dreams without having to constantly dilute shareholders by tapping into the equity markets every time Bitcoin takes a dip. Expectations are often set by the bears who point to the widening net loss and the withdrawal of previous hash rate guidance. They see operational challenges and deployment delays as a sign of weakness, but the reality is that Bitfarms is sacrificing short-term hash rate vanity metrics for long-term operational efficiency. They are upgrading their fleet to an 18 watts per terahash efficiency, which puts them in the top tier of miners globally. They aren't just mining more, they are mining smarter and cheaper. While the sector as a whole is dealing with rising electricity costs, Bitfarms has secured contracted growth capacity that total over 2.1 gigawatts of energy infrastructure assets. In a world where electricity is becoming the new global currency, owning that much energized capacity is a massive competitive advantage that the market has yet to fully price in. The business model of Bitfarms is straightforward on the surface, but complex in its execution. At its core, they operate massive server farms that validate transactions on the Bitcoin blockchain. They earn Bitcoin from block rewards and transaction fees, which they either hold in their treasury or sell to fund operations. However, the shift into the HPC and AI space changes the math entirely. Instead of being entirely reliant on the volatility of a single digital asset, they are becoming an energy arbitrage firm. They take low-cost power and convert it into the most valuable output possible, whether that's a Bitcoin or a computation for a large language model. This flexibility is what separates a legacy miner from a future-proof infrastructure company. If you're looking for investment help or exploring online investing options through a Fidelity brokerage or perhaps a more automated route like Schwab Intelligent Portfolios, you have to understand where Bitfarms fits in a broader strategy. It's a high beta play, meaning it moves much more aggressively than the S&P 500 or even the NASDAQ, but it offers a specific type of exposure to the digital economy that you won't find in a standard tech stock. Unlike Nvidia stock or Apple stock, which trade on multiples of their earnings and hardware cycles, Bitfarms trades on a combination of energy capacity, Bitcoin price, and infrastructure value. The macroeconomic pressures cannot be ignored. We are entering a period where the Federal Reserve is navigating a delicate balance and geopolitical tensions are keeping the markets on edge. In times of uncertainty, the narrative for Bitcoin as digital gold often gains traction, which historically provides a tailwind for the miners. But the risk-off trend we saw in the broader markets recently has dragged down everything from the Nifty to the Dow, and crypto-exposed stocks were not spared. The recent drop from the $3 level down to where we are now at $2.83 is a reflection of that broad-based selling pressure. Yet if you look at the volume, it has been decreasing on the down days, which often suggests that the selling is becoming exhausted. Moving into the future outlook, we have several catalysts on the horizon. The most immediate is the Needham Conference, where any update on the 18-megawatt gross capacity equipment for their liquid-cooled site could trigger a re-rating. We also have the Q4 earnings report expected in late March, which will be the first time we see the full impact of their U.S. pivot and the finalized accounting under U.S. GAAP. This transition to U.S. GAAP is a subtle but vital move. It makes the company more transparent and easier to analyze for major institutional funds that might have been hesitant to jump in while they were using international standards that didn't align with their mandates. The expectation is a long, slow grind as they build out their new sites. The reality could be much faster. They have already started a corporate share buyback program authorized to purchase up to 10% of their public float. When a company with nearly $1 billion in liquidity starts buying back its own stock at these prices, it sends a powerful message to the market. We believe we are undervalued. They have already bought millions of shares at an average price of $1.27, and with the current price at $2.83, those early moves are looking like a masterclass in capital allocation. As we look at the potential risks, they are clear. A sustained drop in the price of Bitcoin would compress mining margins and potentially delay the ROI on their infrastructure investments. Furthermore, any delays in the delivery of high-end GPUs for their AI conversion could stall that side of the business. But when you weigh these risks against the massive liquidity, the shrinking supply of Bitcoin, and the insatiable demand for power in North America, the scale seems to tip heavily in one direction. To wrap this up, the gap between expectation and reality for Bitfarms has never been wider. The market expects a volatile, high-risk miner struggling with geography and costs. The reality is a cash-rich, operationally efficient 100% North American infrastructure giant in the making. They are exiting low-performing regions, buying back their own stock, and pivoting toward the most valuable computing sectors in history. Whether you're using a self-investing platform or following Fidelity Wealth Management advice, ignoring the structural shift in the mining sector would be a mistake. Bitfarms has survived the lean years and now is using its war chest to dictate its own terms in the new digital economy. Watch the price action around the $2.75 support level very closely. If it holds, we could be looking at the foundation for the next leg up towards that $4 analyst target. The tension between those who see a dying mining model and those who see a rising infrastructure play is what will drive the volatility and the opportunity in the coming months. Stay sharp, watch the volume, and pay attention to the conference updates this week. The story of Bitfarms is no longer just about the next block, it's about the next decade of power. Would you like me to analyze the specific impact of the upcoming Needham Growth Conference on Bitfarms' short-term price targets?